Hi everyone, and welcome back to Investment Research. I'm Simo, your equity research analyst. I hope you're doing fine. So today I need to talk about something that's keeping a lot of people up at night, where to actually keep your money safe. So I'm going to break down the 8 safest banks in our country Now, unless you're keeping cash under your mattress, and honestly, I wouldn't be shocked if some folks are doing exactly that after everything we've seen in the banking sector, most of us are using at least one bank or credit union. But here's the question everyone's asking right now: how safe is your bank really? Today, I'm breaking down my personal list of the 8 safest banks to keep your money in America right now, and I'll explain exactly how I chose them using the same criteria that industry analysts and regulators use. Before I get into the specific banks, let me give you some context about the 4 different types of banks that most people use. You've got national banks like Chase, Citi, or Bank of America that operate across the entire country. Then you've got online banks like Ally, Marcus, and Capital One that typically have lower fees and higher savings rates. You've also got regional and community banks like PNC and Citizens that offer more personalized service. And finally, credit unions like Navy Federal and PenFed, which are member-owned cooperatives. Now, each of these has advantages in normal times. National banks offer accessibility and a full range of products. Online banks have competitive rates and low fees. Regional banks give you that personal touch, and credit unions offer great rates because they're not for profit. But folks, these are not normal times, and what we've learned from recent banking turmoil is that when things get rough, what really matters comes down to one word: government backing. Now, you might be wondering how industry analysts actually determine if a bank is healthy. Let me walk you through the 5 key factors they look at. First is profitability, basically how much money the bank makes, and metrics like net interest margin, which is the difference between what they pay depositors and what they charge borrowers. Second is provisions for loan losses, meaning how much money they've set aside to cover loans that might go bad. Third is capital and liquidity as a percentage of the balance sheet, which tells you how much money is available to cover unexpected losses. Fourth is unrealized losses on securities they're holding until maturity, losses they take if they had to sell treasury bonds or other securities before maturity, say if depositors are withdrawing money faster than expected. And fifth is credit ratings from agencies like Moody's, Standard & Poor's, and Fitch. Now, all these factors are useful, and it's good you know about them because you'll hear analysts talking about them constantly. But here's the thing. They're often backward-looking and don't necessarily predict what happens during a sudden bank run. We saw this with Silicon Valley Bank. All their financial metrics were publicly available. Their annual reports showed all these ratios, and yet the bank run came suddenly and surprised everyone. Even their credit rating wasn't downgraded until the day the FDIC shut them down. So while these metrics are important for sounding smart at your next family gathering, in real life there's a much simpler and more powerful way to identify the safest banks. Here's what we learned from recent bank failures. What makes your money safe when it really matters, when there's actual panic and people are pulling their deposits, is government backing. Now, we've talked about FDIC insurance before on this channel, and all the regulars know the drill. Make sure you bank with an FDIC insured institution and stay under the $250,000 threshold per depositor, per bank, per ownership category. Just because the government decided to protect all depositors at Silicon Valley Bank, even those above the $250,000 limit, doesn't mean they'll do it again next time, so that FDIC protection is your baseline, your foundation. But the 8 banks on my list have something even more powerful than just FDIC insurance. They're what's known as GSIBs, Global Systemically Important Banks. Let me explain what that means in plain English. These are banks that are so important to the global financial system that if one of them failed, it could trigger another worldwide financial crisis and drag the entire economy down with it. Nobody wants that. Not the government, not regulators, not other banks. Nobody. Because of their importance, GSIBs are subject to much stricter regulation than regular banks. They're required to have significantly more capital and liquidity on hand. They face higher supervisory expectations around risk management, governance, and internal controls, and they have entire teams of regulators looking over their shoulders constantly to make sure they're handling money properly. Now, comparing a regular bank to a GSIB is like comparing two completely different species. A friend of mine put it perfectly. Comparing the risk management team at Silicon Valley Bank to the risk management team at a GSIB is like comparing a crop duster to an F-35 fighter jet. No offense to crop dusters, we loved that Pixar movie, but you get the picture. Silicon Valley Bank was the 16th largest bank in the US, and it was 15 times smaller than the top-ranked GSIB. It wasn't even close to being systemically important, which is why it wasn't subject to the same heavy regulations these 8 banks face. The Financial Stability Board publishes an official list of GSIBs, and they're ranked according to buckets. The higher the bucket number, the more globally relevant a bank is, and the more capital it needs to hold on its balance sheet. Bucket 4 at the very top requires holding an extra 2.5% of capital above what non-GSIBs must hold, and there's only one bank in the entire world in this bucket. That's JP Chase, and that's number 1 on my list of safest banks. In bucket 3 with an extra 2% capital requirement, we have Citigroup. Bank of America recently moved down from bucket 3 to bucket 2. In bucket 2 with an extra 1.5% capital, we now have Bank of America and Goldman Sachs plus Group Credit Agricole, which moved up from bucket 1. And in bucket 1 with an extra 1% capital requirement, we have Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo. Now, what the government showed us when they rescued Silicon Valley Bank and Signature Bank is that if they're willing to save those smaller non-GSIB banks, they will absolutely not let these 8 leading GSIBs fail. It's that simple. Bigger is better in a crisis because these 8 banks have more resources, more risk managers, more experience, more capital to weather economic storms, and more regulators watching their every move. For those who really want to dive deep into how these bucket calculations work, the Financial Stability Board publishes all the methodology online, but for most of us, just knowing that these 8 banks are in a completely different category of safety is enough. Let me quickly run through the 8 US-based GSIBs. Number 1 is JP Chase, the only bank in bucket 4, the absolute top tier. This is the largest bank in the United States, with nearly $4 trillion in assets under management and over 225 years of history. It's required to maintain that extra 2.5% capital cushion, and because of its size, history, reputation, and financial strength, it's the overall safest bank on this list. Number 2 is Citigroup in bucket 3. Citibank is the consumer-facing division with a global presence in nearly 180 countries. Number 3 is Bank of America, now in bucket 2, the second largest US bank serving about 69 million consumers and small business clients worldwide. Number 4 is Goldman Sachs, also in bucket 2. Primarily known for investment banking, but also offering consumer banking through Marcus. Number 5 is Bank of New York Mellon in bucket 1. When the New York Stock Exchange opened in 1792, Bank of New York was the first company traded, so we're talking about serious history here. Number 6 is Morgan Stanley, also bucket 1, a global financial services firm with a strong wealth management division. Number 7 is State Street in bucket 1, a major financial services and asset management company with a presence in over 100 markets globally. And number 8 is Wells Fargo, bucket 1, one of the big 4 banks in America with over 5,000 branches nationwide. Now, I want to give you a bonus option, number 9, for those of you who are really worried about bank failures but not so much about a US government default. It's called Treasury Direct Certificate of Indebtedness, or COI. Think of it as a 0% savings account directly with the US Treasury. It doesn't earn any interest, but it's liquid if you need cash. According to Treasury Direct representatives, it usually takes 1 to 2 business days for funds to arrive from the QI into your designated bank account. You can buy a QI by logging into your Treasury Direct account, clicking Buy Direct, and selecting QI. There's a maximum limit of $1,000 per transaction. You can park your money there without worrying about bank default, broker default, or whatever other type of default might pop up. If you trust the US government's full faith and credit, your money is as safe as it can be. It also has the added benefit of being readily available when you want to purchase your next tranche of I-bonds or other treasury securities. Now, personally, I didn't go with the co-I option because I still prefer a little interest over no interest at all. That's why I spent time this week moving personal and business accounts over to JP Morgan Chase from some non-GSIB banks. Not just because JP was at the very top of the list, although that certainly didn't hurt, but also because they had the most convenient branch locations for us. I actually looked at Citi, Bank of America, and a few other GSIBs as well, but JP just made the most sense for our situation. And yes, I'm that person who occasionally likes seeing someone face to face at a branch for certain transactions. From the line of folks I saw trying to open accounts after me, I clearly wasn't the only one thinking this way. Now, I'm not saying everyone should immediately run out and open an account at one of these 8 GSIBs or park their cash in a Treasury Direct QI account. Everyone's financial journey is different. We all have compelling reasons for who we bank with, and some of us have built great relationships over time with our bank or credit union, something that absolutely should not be discounted. Customer service, convenience, special programs, all of that matters. But if you continue to find yourself nervous, tossing and turning at night, either because you're above that $250,000 FDIC threshold, or even despite staying below that threshold, it might make sense to take a closer look at one of these GSIBs. If you do decide to check them out, make sure you look online first, because at the time I'm recording this in November 2025, some of them are offering sign-up bonuses for new customers, which is pretty customary in the banking industry. You might as well get paid a few $100 for moving your money to a safer institution. One more thing I need to mention. This analysis is based on data and our perspective of what's happened so far in the banking sector. It does not guarantee any future outcomes. I'm not sponsored by any of these financial institutions, and I don't receive any compensation if you choose to do business with any of the banks on this list. This is purely educational content to help you make informed decisions about where to keep your hard-earned money. The bottom line is this: in uncertain economic times, the safest place for your money is with institutions that have explicit government backing at the highest levels. The 8 GSIBs on this list represent the banks that regulators and the government will move heaven and earth to protect, because letting them fail would risk the entire financial system. That's the harsh reality, and that's why they're the safest banks in America right now. Combine that protection with staying under FDIC limits, and you've got about as much safety as you can get in the banking system without literally keeping cash under your mattress. Alright folks, I hope you found this breakdown of the 8 safest banks helpful. If you did, make sure to share this with anyone you care about who's worried about where their money is sitting. And of course, as always, do your own research, understand your personal situation, and make the decision that's right for you and your family. Thanks for watching, and I'll see you in the next analysis.